Hey, what's going on, cash flow hackers? It's Chris with Life 180, and today we're talking about what type of life insurance should you buy. Now, this is one of those questions I get all the time. Chances are you're looking to do this. You've contemplated getting life insurance. You're looking at term insurance. Maybe you're seeing all the rage about Index Universal Life online. Maybe you are contemplating whole life insurance. You've seen variable life insurance. I don't know. There's so many different options out there. But what I think is important, like everything else that I talk about in personal finance, it has to do with structure more than it does with the actual products. And so for this video, what I want to walk through is not just what type of policy you should buy, but really the thought process that you should go down before making the decision about what product is right for you in general. Because for you to know what product is right for you, you have to understand how all the different products work, what your needs are, what your wants are, what your long-term objectives are, what your short-term needs are, and ultimately how the financial products play into your overall financial picture. So without further ado, let's just get into it. All right, so here we go. So before we figure out what type of life insurance, what we need to figure out is the first thing we have to do is we have to go figure out how much life insurance do we want. Now, this is the big question because this is an area that I believe people make the biggest mistakes in general. And the reason I say that is because when most people just come through and they say, well, I need 500,000 or I need $1 million in life insurance. And what happens is they focus on these kind of like round numbers that sound significant, when reality, what we need to think about is like how much life insurance we need really should be determined by what do I want that to accomplish for my family when I'm gone. So at the end of the day, we have to reverse engineer that process. A lot of people feel like 500,000 or $1 million in coverage is going to be enough for their families, when in fact, and I see this all the time, somebody making, and I'll just run through the numbers with you really quickly so you could see it. Somebody making $100,000 a year will look at this and be like, well, man, if I have $1 million, well, and I have a stay-at-home spouse, I'm going to say stay at home, and 2 to 3 kids. If this is my situation, a lot of people will say, well, we've got a $600,000 house, a couple cars, let's just call it $100K in cars. And, they look at this and they go, well, if anything happens to me, my spouse will be fine because this $700,000 there plus, $300,000 more is going to cover, they'll be fine. And, this scenario kind of bothers me. And I've had some really, really uncomfortable and awkward conversations with people when they say to me, well, when I die, it's not my responsibility. She'll have to figure it out or he'll have to figure it out. I got to tell you, that just is not in alignment with my character and my beliefs about what I think my responsibility is. I look at this and I say, when I pass away, if I pass away, which hope to God doesn't happen anytime soon, but if I were to pass away, I want to make sure that my wife is able to maintain her standard of living for the rest of her life, the way that she's living it as if I were alive. I want to make sure that my kids get everything that they would get in life should I remain alive and healthy and thriving, right? That's the idea. So when we look at this whole idea of being like, all right, I'm going to do $1 million because I just want to pay off the house and pay off the cars and get rid of the debt. Okay, that's better than nothing. Don't get me wrong. But that only leaves in this scenario $300,000 left over, which if you think about what $300,000 in that scenario, it doesn't last long. And if you get a couple that's 45 years old, right? If that's what happens, now that spouse who ended up being the surviving spouse inheriting this $300,000 in no debt, granted, this $300,000, you could go out and you could create some investments or whatever, but chances are if they've been staying at home the whole time, they're not sophisticated enough, savvy enough to make good financial educated decisions. That's why it's really important to not just make sure you get the right coverage, but work with the right agent that can be there and be an advocate for everything that you want to leave behind to protect your family. You want the agent that you're working with to be able to kind of step in and be able to be a coach for your spouse at the same time. And so that's a really big thing that most people don't think about. And so getting back to the point here, and that's a long way around kind of talking about how much life insurance do you need, or I would say not even need. Everybody says life insurance need. I hate that. I'm going to do that. I'm going to say want. Life insurance is never a need product, because if I die, I don't need life insurance. It's a want product. I want to make sure my family is taken care of when I'm gone. Do I need to do that? Absolutely not. I don't. It's a want product. It's a love-based product. And so I think if you love your family, it's on you to figure out how much do you want to make sure that their standard of living is not interrupted, to make sure that your kids get everything that they want and that you want them to have. Now, how much life insurance do I want? Okay, that's fine. Then what we have to do, we've determined it. And so let's say, typically, just to give you an idea, for that $100,000, typically what they're going to do, they're going to max you out at $2 million of coverage. Is basically going to be the max. You could, in certain situations, go up to $3 million, potentially, but we're just going to operate under the assumption of the $2 million. So that's step one, is figuring out how much do I want. Let's just say you say I make $100,000 a year. I want to get the max that the life insurance company is going to give me. Okay, fine. Next thing that we have to figure out is, what is your cash flow? What does your cash flow look like? And what we're looking at there is saying, all right, what is, from a free and clear cash flow perspective, what are you doing with that money? Where are you saving it? Where are you investing it? How are you structuring your financial life? That's number two. Number three, once we get into that, now we're going to get into the situation where we start saying, all right, we've got the cash flow figured out, but now we have to figure out, what do our current financial structure elements look like? We have an emergency fund. We have an opportunity fund. We have investments. We have all these different things, and you have other insurances. This could be like long-term care, life, DI, all these things. So we can't just think about life insurance in a vacuum, in a bubble. We have to think about, how does it impact, how does it connect and integrate with the rest of our financial strategies? A lot of people like to silo these things off, but we need to think about how they all integrate together. And so the next step that we need to think about above and beyond the cash flow is like, all right, what does the rest of my plan look like? And now I can start to make decisions, because I can look at the insurances and say, all right, what are my needs in all these things? Chances are long-term care and disability insurance is something that you haven't really thought about. Most Americans don't, which, I think is something that should be addressed. And there's ways that even your life insurance policy can help you if you do it the right way. And so then what I do is I go here and I say, all right, let's back this out. If you get a family that's making $100,000 a year, or an individual, whatever, it doesn't matter. I'm just going to use this example. And that $100,000 a year, let's just say you have some money in a 401k or some, qualified accounts like IRAs, a Roth IRA, something of that nature. You have a little bit of an emergency fund, maybe like a month's worth of savings. But then it's really about, like, how do we get that emergency fund built? How do we get the opportunity fund built if you want to build a business or real estate? Once again, I'm not saying you need an opportunity fund. It's a matter of, what are your goals and objectives? What are your values and beliefs? What do you want your life to look like? And are you using your money as a tool to accomplish the goals and create the life that you want to live, right? Most of the time, people are not doing that intentionally enough. And so when we look at this $100,000 of income and we start to back it out and we say, all right, I've got, let's just call it $15,000 a year. That's what I have for free and clear cash flow. Okay? That would be the $15,000. So now what I have to look like here is, then I say $15,000 and I go, all right, out of that $15,000, my first objective is to make sure that I've got my coverage in place. I need to have this $2 million of death benefit in place. Okay? That's what I want to have done. So now I have to figure out, what does that cost? For me, I'll tell you, it's actually good for me. I just got another $2 million of term policy, and it was $1,400 a year. So let's call it $1,500 a year for just round numbers. And so now out of $15,000, $1,500 goes towards this insurance right there. And so now we have $13,500 left. Now we have to figure out what are we doing with this $13,500 with the rest of our money to figure out, is it helping us work towards achieving our goals with all this stuff, right? This is what most people don't do. So what I would typically do is say, let's lock in a convertible term policy that has living benefits. We want to make sure it's convertible, meaning you can use it to convert on a guaranteed basis to a participating mutual whole life contract. So convertible to whole life specifically. Don't buy these contracts that convert to IUL. That is not what you want. So convertible to whole life, and then you want to make sure that it has living benefits on it. So if you need a convertible term policy, those are the two attributes that you are looking for when you are looking to get this $2 million number taken care of. So we do that. Okay, it's $1,500 a year. Bada bing, bada boom. We got that. We got $13,500 left. And now what do? We have to look at our other needs. We look at our foundational needs, and we look at the emergency fund, and we say, all right, what do we make? We make $100,000 a year. Let's just call that $10,000 a month. We say we should have 6 months worth of savings in an emergency fund. That's $60,000 in an emergency fund is what we need. We have $10,000, so we need to make sure we get $50,000 more in there, right? So what do we want to do? We want to make sure that we design a whole life insurance policy is where we're gonna save our emergency fund. And so we take this whole life insurance policy and we fund it, because the reason we're funding it and utilizing a whole life insurance policy is because of the fact that it's gonna have access to cash value. I'm gonna write CV for cash value. The fact that we have whole life insurance that's gonna be highly liquid and access to the cash value, but it's also gonna give us the living benefits, which if we become critically, chronically, or terminally ill, we're gonna have access to the death benefit while we're alive to help pay for medical treatment, so on and so forth. I use the story all the time. I share about my father-in-law. He was diagnosed with stage 4 pancreatic cancer. We were able to accelerate the death benefits using living benefits, pay for treatments that health insurance would not have covered, and most people wouldn't have the multiple six figures that were required to pay for these treatments. And for 4 years now, he's been alive, and he's actually thriving and healthy and playing golf 4 days a week, even though he was given 90 days to live with stage 4 pancreatic cancer after they found a 7.5 centimeter tumor on his pancreas that had spread to his liver already. So think about that. The ability to have access to this stuff. And this is where, when you come back up here, what are my overall long-term financial needs? Long-term care comes into play. Life insurance comes into play. Disability insurance can potentially come into play. But at the end of the day, I'm not saying out of this $13,500, just to be really clear, I'm not saying you should put all $13,500 into the whole life policy. It really depends on what your numbers look like, what your profile is. Do you want an opportunity fund? Do you want to be a real estate investor? Do you want to start a business? Do you want to do private lending or anything of that nature? If you do, well, then you need to start looking beyond the emergency fund and not just this 60,000, but you want to then grow this 60,000 to as much as you physically can possibly grow it to, right? So that 60,000, you want to grow it to probably 250,000. Why? Because you want to be able to have that extra 190,000 for real estate, business, private money lending, anything that you can utilize your unique skills, gifts, and abilities to actually go out and create a bigger return than the market would get. Now, if this is not you and you don't want to be an investor, like in that way, an entrepreneur, real estate investor, anything of that nature, well, then the answer is you just want to get to this $60,000 number, make sure your emergency fund is taken care of there, and then let it grow to beat inflation, because long-term whole life insurance is going to beat a high yield savings account over time. That's just the way it is. And so my suggestion is, depending on how much free and clear cash flow out of this $13,500 that you have left, depending on your profile and your values and your beliefs, is going to dictate how much of that, whether it's like $7,500 a year and the rest goes into an investment, like maybe a Roth IRA if you qualify, if your income's low enough, which at $100,000 a year it would be, that would be a perfect scenario. So at the end of the day, this is what I always like to convey to people. There is no one right way, I should say, to decide what type of policy is right for you. Really, it is about more in regards to your structure and what your personal financial goals are, and really what you desire in life. That's what matters most. To determine what type of policy that you want, you have to first understand what problems are you trying to solve in your life and what do you need this policy to do for you and for how long. One of the biggest myths that people are told, and I want to kind of land the plane with this, is that when you get to retirement, you're not going to need insurance. You're not going to need life insurance. So you'll be able to self-insure. That's what the Dave Ramseys of the world will tell you and have you believe. So you don't need whole life insurance because you don't need that. Well, as soon as your term insurance ends, you're going to hit retirement in that situation. The greatest risk to you in retirement is your medical expenses. So imagine being able to have not just cash value to utilize as like a bond alternative in retirement, not to just have a guaranteed death benefit legacy to make sure you are passing money to your next generation on a guaranteed basis, but to make sure that you also have the accelerated benefits, access to the death benefit while you're alive, to have as the control over your medical directive while you're alive. These are the questions that we have to be answering. Life insurance is not just death insurance. We have to think about how we can use it while we're alive, how much we need at different stages of our life, and ultimately what we want to leave to the next generations. And when we figure that out, then we can make the decisions that are in alignment with our values and our beliefs. And that, to me, is the key to fulfillment, to success, and to you actually achieving the life that you want to achieve. So hopefully this makes sense. If you have any questions about anything, go ahead and leave a comment in the comment section below. I'm happy to engage with every single comment. You have any questions at all, you want to get on with somebody on the team, there's a link in the description below. You can go down below, set up a clarity call with a Life 180 coach, and that's it. Hopefully you found value in this. If you did, like it, share it, get it out there to people, subscribe, hit the bell. That way you are notified every time I launch a new video if you haven't already. And until next video, have a blessed, inspirational day. We'll talk soon. See ya.